And my name is Jay Burks, Director of Enterprise Procurement at Comcast. And it's a privilege to join you today for this Mergers and Acquisitions Masterclass event. Today, I'm encouraged. I have many hats today, but my one goal for you to do is to leave here fulfilled. Hopefully, you'll renew some relationships, make some new relationships, and eventually leave with some learning. And we have a esteemed panelists of colleagues, some subject matter experts. Thank you to the Spectacor team for making this a wonderful event. We have some excellent partners, the EMSTC, much appreciated. So this is a diverse audience. Again, please make all types of connections. And at Comcast, diversity, equity, inclusion, or DE&I, is our foundation for innovation. We have 5 focus areas of diversity, equity, inclusion, one being governance, one being HR, human resources, community impact, programming, and then supplier diversity. And we all know what supplier diversity is. It's a proactive process to ensuring equitable opportunities for suppliers. Within our supplier diversity strategy, we call it the 4-pillar strategy. The first pillar being looking at organic vendor growth. How can we work with our organic vendors? Tier 2, how can we work with our non-diverse primes and have them include diverse prime contractors? New vendor opportunities, and then finally capacity building. The 4th pillar to capacity building is right around this event, the Mergers and Acquisitions Masterclass event. So with that said, in preparation to MC this event, I did some research and Googled everything for mergers and acquisitions, and I came across a KPMG CEO's report, Outlook. And this is a report, KPMG, they surveyed about 1,400 CEOs from 11 different markets, global CEOs. And obviously you would think, of course, CEOs are going to be thinking about supply chain, interest rates, talent, HR, cybersecurity. But one thing that really stuck out was mergers and acquisitions. And the report, 46% of the CEOs rated mergers and acquisitions as high on their list for growth. 26% labeled it as moderate. Previously in 2022, this report was done, and only 22% of the CEOs had a high appetite for mergers and acquisitions. So seeing that report really solidified the importance of this Mergers and Acquisitions Masterclass event. So we're right on target for discussing mergers and acquisitions for growth.
When we think of growth, we think of increasing our revenue, but what happens when we increase our revenue, our costs generally move in the same direction as our revenue increases. Scaling is different. This is about the ability for you to increase revenue while at the same time your costs only move incrementally. So it requires some strategy. I'll look to some of the emerging issues that I see in the M&A landscape. And there's a PricewaterhouseCoopers report that looks at what has happened mid-year in 2022. So it starts out with inflation, rising interest rates, geopolitical turmoil, increased government scrutiny. These have all contributed to both a surge in the volatility of the market, and it also has slowed down the number of private equity deals. So when we say public financing, we're talking about publicly traded companies, but private equity, where we're dealing with companies that are not trading on the stock market. This slowdown is actually being offset by a new measure of due diligence. This due diligence is focused around not only helping companies with structuring these deals, but it also safeguards them from both the volatility and some new increased regulation. Antitrust regulation is a new opportunity for companies that are in this procurement space. The antitrust regulations have come about in the Biden administration. What has happened is you saw the consolidation and merger of publicly traded companies that were taking advantage of disparate technologies. They were able to combine their forces, and they were gaining greater and greater market share, so that publicly traded companies basically dominated the landscape and took over the lion's share of opportunities throughout the pandemic. So now what we see is an emerging opportunity, especially because DEI has formed. And so the MSDC in their role is now a champion for this idea of looking at private equity as a form of financing for mergers and acquisitions. And this happens at a time when we have the combination of both DEI and supply chain disruption. Companies like Comcast are now developing value chain strategies, and there is within the academic literature an opportunity for this value chain to be seen through the lens of procurement as a primary activity and driver of opportunities for smaller businesses. This is great news for all of those who are in the room today.
The cable division is based in Philadelphia, Comcast on the left. We have NBC in New York, and Sky, of course, for our European operations. My team just focuses primarily on the cable division, really looking to those various sectors that Jay talked about, everything from broadband, which is our core bread and butter service, to enhancing and finding new streams for monetization. Sometimes it includes things like video streaming, all the way into smart home, healthcare, et cetera. It's very broad from an organization perspective. And my team's real goal is to go, I almost think of it as the Wild West. Pre-pandemic, we made a lot of trips to the West Coast, to Austin, to Seattle, meeting with new companies, meeting with startups, going to various startup events, trying to find cutting edge technologies in the academic setting, and finding opportunities that perhaps we can acquire these technologies, this talent, or this company, and bring that into Comcast's ecosystem. But we're very broad. Of course, I'm not an expert in any one of those categories. I know a little bit to be dangerous. So definitely rely a lot on perhaps the people that you're interacting with at Comcast, some of our subject matter experts in our various business units. And I think that I will talk about how we find deals at Comcast, and I'll touch on that as probably the best avenue to find a deal is actually getting out of my seat, speaking to our business unit expert and saying, what's on your roadmap for the next 12 months, the next 18 months? And it continuously changes every quarter as we just heard from a changing M&A environment. Our priorities are continuing to change, definitely from what the equity markets are doing, as well as how stock analysts look at Comcast stock. We can continuously look to evolve. So understanding where their priorities are and figuring out, okay, what can I grow organically, but perhaps there's a way to grow inorganically. Yes, it'll be maybe a little bit more expensive if you're growing inorganically ahead of time, but your time to market is reduced, or you're bringing in some experts that will take time to cultivate at Comcast. And by far, that's the best way for me to say, give me a list of areas, subsectors that are really interesting for you, so that when I go on the road or when I'm talking to companies on a daily basis, I can find the right opportunities and I'm not just throwing things at the wall. The other area is sometimes our business units are partnering with some of your companies or others, and they're saying, "Hey, Jason, we're ready to execute this large multi-million-dollar contract. Company's also looking to raise cash. Should we invest in this company?" And our group will help them think about, well, is this the right company to invest in? Perhaps before we're ready to write that check, we'll run an RFP, we'll look at the competitive landscape, we'll make sure that we're tying an investment and a partnership together in a way that makes sense. So we do everything from investments, joint ventures, and acquisitions. But I think at the core of it, it really starts with what's the strategic rationale for Comcast? Why do we need to acquire this business? We're in so many different businesses today, from everything from broadband and wireless to enterprise and advertising. Do we really need to own all of these various partnerships or vendor relationships? So it starts with what's that strategic rationale? And sometimes, I'll pick on cybersecurity, for example. We have some cybersecurity partnerships. It's very core to everything that we do. Cybersecurity is enabled in all of our 30 million gateways that we have in people's homes around the world. So we thought, okay, perhaps we should, in addition to having this partnership, marry that with an investment, because we want to make sure it's defensive. It's so core to what we do at Comcast. We would hate for unfriendly to come in and acquire that company that we have a big partnership with. Or perhaps we're already paying millions of dollars in annual expenses. Perhaps we could save some of that money if we just make an investment, earlier, and we get some beneficial terms from a commercial perspective. So we'll do investments, and we will, take board seats on companies, make sure we have a seat at the table to make sure that they're not just using our logo to go find other opportunities, but they're also servicing what we do at Comcast. It's a continually, I'd say, evolving landscape, especially in the last year. M&A industry has just been all over the map. I think we've talked about a little bit of the geopolitical inflation, interest rates that are making, that are also causing our industry to be at a pivotal time. But I'd also say that it's a time for us to actually really dive into M&A, because perhaps valuations are cheaper. Perhaps companies that normally wouldn't be looking to sell or normally wouldn't be looking to do an investment from someone like a Comcast, perhaps they wanted to go down the venture capital or private equity route, they're open to conversations with us. So we'd love to just continue that process as well.
Well, good afternoon. It's great to see everybody. Again, as Jay mentioned, my name is Ajamu Johnson. I lead the supplier inclusion and sustainability teams across Comcast Cable, NBC Universal, and Sky. In working with diverse-owned businesses and small and medium-sized businesses for the last 25 years, at Comcast, M&A is natural to us, right? I've been there, again, for quite a while. I've lost track of the amount of deals that we've done. You absolutely can grow your organization organically, and there's not necessarily anything wrong with that, but there's a ton of businesses that grow through M&A in an environment like this. Sometimes some people will tell you that it yields more to that type of activity, and at times we'll see vendors in our supply chain, diverse or otherwise, that may struggle as it relates to scale or even connectivity because they're not keeping up with our organization or staying ahead of our organization. We really feel passionate about this discussion, which is why we brought this together today. And are hoping that all of you will get something from it.
I'd like to welcome you all here to our Roar on Tour event, which is a masterclass on M&A. What we're trying to do with our efforts now in the council is to create events such as this, where we're talking about very topical, very specific, very growth-minded activities that gives us an opportunity to engage you in a direct way to discuss things that can help our MBE base and to, by extension, our corporate membership to grow and accelerate and be level competitors in the marketplace. And what I would like for everyone to know in this room, that this is a series of events. Roar on Tour is an intentional name because we want to make sure that we have these type of events throughout our region and by extension throughout our national network to allow for us to have programs and activities with an ellipse at the end. So when you listen to these experts and our esteemed panelists, consider this the beginning of a process, an ongoing effort to make sure that we are serving you in the best way we can with the best information, the best access to growth strategies and activities, the best means of networking with like-minded professionals and like-minded companies at various levels in the continuum of revenue and size. Make sure you engage one another in the room. Make sure you're present and aware of what's going on here, because this is an ellipse. This is an ongoing effort, and we will strive to make sure that these type of events continue to occur with this level of impact and this level of importance.
Well, I'm excited because this topic of M&A and diverse suppliers is so near and dear to my heart. There's no shortage of work, and there's certainly no shortage of ready now, capable, diverse businesses ready to answer the call for any reason. So we're going to have two amazing guests join me here on stage. So come on down. So Tarrus, please come on down to the stage, and Jose, please come on.
My name's Tarrus Richardson. I'm originally from Bethesda, Bethesda, Maryland, with a firm.
You might as well say DC.
Or DC, a firm called IMB Partners. IMB stands for Investors in Minority Business. We were set up to basically buy and build businesses either through partnership or acquisitions. To date, we've made 7 acquisitions and 1 large strategic partnership. And by the end of October, we'll be at $1 billion. So I look forward to talking with you guys.
Congrats, by the way. So good afternoon, welcome. Thank you so much for having me here today. A pleasure to be here. My name is Jose Mas. I'm CEO of a company called Mastech. With me today is Rick Suarez, who runs our communications business. Mastech, we are a construction company that focuses on infrastructure. So we do everything from communications infrastructure, which is really where we got founded, and I hope to talk about that later. But you know, if you think about all of the different telcos that exist, the cable TV operators, even some of the electric companies, kind of dig ditches. That's how we started, digging ditches, putting in stuff in the ground, building the communications networks. later in our history, and we'll get into that later too, we really diversified and expanded our base. So today, we've got a very large presence in the energy markets where we do everything from distribution, transmission to generation. We've got a large pipeline business where we do a lot of work in the oil and gas markets. We've got a very large presence across the country, over 35,000 people. Today, we're a Fortune 500 business. We expect to do about $13 billion of revenue. Next year, a lot of that has been both organic and acquisitive growth. So I look forward to sharing our story with you and explaining how we got there anyway.
Gentlemen, thank you again for being here today. Again, such an important topic. We have an audience that wants to hear all the tips and tricks and secrets so we can help grow businesses, because this is about growth and development. This is about our communities. This is about diversity, equity, and inclusion. And so when you think about M&As, I'll just ask one of the first questions that I know it's on my mind. What are some of the barriers? What are some of the barriers? Let's just get the elephant, that's in the room right on the table. What are you saying, Tarrus? We'll start with you.
I think barriers is mindset. Of the audience, how many people who are thinking about buying a business versus growing a business organically by showing of hands? And so if you look at the room, so many people think of it as this very difficult thing to do and don't figure out how to make it a part of their business strategy. And so my hope is to demystify the challenge of growth through acquisitions versus organically trying to win contracts with large corporations.
So mindset, for sure. Got it. Thank you.
If you own a business and you're trying to buy a business, the first question is, where do I get the money, right? Do I have the money? Do I actually have the ability of making that investment to expand my business via acquisition? And I think there's two sides, right? There's a buying side, but there's also a selling side. There's a lot of people that ultimately want to get to that point where they can sell their business, and there's lots of challenges with selling your business as well. But I think on the buy side, that initial transaction, the hardest part is actually understanding how you can craft it with whatever means you have available. Money being the biggest obstacle, right? And as we get into this, I think you really have to understand the concept as to why you're trying to do the deal in the first place. But ultimately, I think the biggest challenge for us all is, how are we going to pay for it?
So we got to think about mindset, right? Do we have a growth mindset, number one? How do we overcome those challenges? And then one of the biggest ones I'm hearing you say, Jose, is how do we pay for it? So here are a couple fast facts about minority businesses. And I thought they were pretty fascinating. I'm like Jay. I'm a student. I'm a lifelong student. I'm back in school now at Cornell again. I just can't get enough. And so I'm always, researching. I want to learn more. And when Jay and, the team put this event together, I wanted to learn some of the fast facts about this space. And I thought it was interesting that minority businesses own more than 8 million firms in this country and drive 1.4 trillion in annual revenues. And that's probably outdated because that's last year's stats, right? A lot has happened in 2022. MBs, minority businesses create job opportunities, tremendous growth. So there's tremendous value there. And over the past 10 years have created almost 5 million jobs in this country. And 50% of all businesses in the last 2 years have been minority-owned businesses. So the need is there, the opportunity is there, and that's why this masterclass is so important, because we got to understand how to do it and how to do it effectively and how to do it in a way that's sustainably. So let's just keep jumping right into it. So we talked about some of the barriers. You heard that, mindset and resources. Let's talk about some of the disparities that we're seeing between even the diverse groups. When I did my research, I noticed that our Asian businesses have more businesses, more revenue, then it's the Hispanic groups, and then it's the Black-owned businesses. Why do you think there's such disparity between those groups, and how do we close those gaps? Because there's enough room for all of us, regardless of what, minority group you're in, and how do we help everyone win in this space?
Yeah, so I think the first stats that you laid out, I think they actually make a ton of sense, right? Minorities have less opportunities at big corporations. We just do, whether we like it, whether we don't like it, whether the world is changing or not. Historically, we've had less opportunities. So for people in these communities to make it, they've got to build it themselves. And if you're fortunate enough to try, I think that's why we have so many small businesses that are started by minority firms. The fastest growing sector of small businesses are minority owned small businesses, by far the fastest growing sector within small businesses. So I think depending on where you came from and depending on what minority group you are and what opportunities you had in front of you gives you an opportunity to start those businesses faster or not. So in my case, in our business, you know, Mostek was founded by, the predecessor company Mostek was founded by my father. He immigrated to this country at the age of 20, nothing but the shirt on his back. He came here, joined the U.S. Army to participate in the Bay of Pigs invasion. That was his whole reason of coming to the United States. Got on a boat, they were starting on the way to Cuba, Bay of Pigs invasion failed, the boat turned around, dropped everybody off in Miami, and he didn't have a penny to his name, didn't speak the language, but couldn't go back. So he had to reinvent his life. And worked a bunch of odd-end jobs, got very lucky, got an opportunity to turn around a business, which he did, and then they gave him half the business. I mean, that for him was his roots, right? And his dream was, you know, how do I build something better for my family and my future? And I think that when you look at the immigrant groups that have come over a long period of time, for a lot of them, it's that, right? It's there is no option, right? It's either you succeed or you fail, and failure is not an option, so I'm going to do everything I can to possibly succeed. And I think it's a mindset. I think when people think that way and you're all in and you're going for it and you can't fail, I think that's what leads to the growth and the ultimate success of so many minority businesses, because it's a different mindset than I think the greater population has.
So we heard a lot about integration and culture, and that's really important. So now let's fast forward to maybe an M&A has happened. You know, it's about how do we set both parties up for success, the company that purchased, the company that's being acquired. I know in my, you know, tenure over years in corporate America, I've been a part of mergers and acquisitions, and it never feels good. It never feels good when it feels like a hostile takeover, right? So talk to us about the importance of culture and integration. And we heard a lot of comments today. You know, I think you even have one of your teammates here who, you know, one of his key functions is all about communication and culture. And so talk to us about the importance of the integration process. What does that look like? And
I think it starts long before the deal ever closes in your selection of the target, right? So selecting the company that you're ultimately going to buy, culture, if the culture doesn't work, the deal's not going to work, period. Most deals fail, so if the culture doesn't work, it's not going to work. And it's truly understanding why you think that culture is going to work. So down to, you know, how does that management team deal with its employees? How does the owner, if he's staying, what are the things that are important to him relative to how he deals with his employees every day? What are the incentives in place? What are the things that make that organization tick? And do you plan to change any of them or not? And understanding that long before you ever make the decision in buying, and what are you bringing to the table? How do you ultimately make that business better? And there's two types of acquisition, right? One is you're more financial in nature. You're buying a business that's going to survive, that you're going to invest in and allow the people that are running it to kind of grow it and manage it, and you're somewhat of a passive investor. Or you're an operating business that's actually buying a business that you fully intend to fully integrate into your business because you see the benefits of putting them together. But I truly think it starts all the way at the beginning. And then it's about, you know, saying the things that the plan that you had, it's actually playing it out the same way without making drastic changes along the way. Think about couple gets divorced, parents remarry, and they each have 3 kids or 2 kids or whatever it is. You know, those kids didn't decide for those parents to remarry. But those parents are now remarried, they made the decisions, but it's those kids that have to live with that decision. And it's that interplay that's going to ultimately make a family or not make a family. Mm-hmm. And acquisition is exactly the same, right? The owners of the business may have decided to merge, but they didn't really get a lot of input from most people most of the time. Sometimes they do. So now it's getting these 2 teams to understand that, you know, they've got to make a family out of it. And not that one team's better than the other, because I think that's one of the biggest issues. You buy a company, and your team automatically thinks, well, we must be a lot better than them. That's why we're buying them. No, quite frankly, right? If you were that much better, we wouldn't have had to buy the company to start with, because you probably would have done exactly what that company did to put itself in a position to get sold. So it's really getting both sides to understand that they each bring something to the table, and managing it to that without one being particularly superior or better than the other at all levels.
Yeah, I love that because when you think about it, right, if I'm acquiring a company, the whole goal is to help us win faster, right, to be more profitable, and we know what comes with that. Tarrus, anything to add to the importance of culture and integration?
I think you got to start with your values, right? So for us, we say diversity is an asset,
Yes.
and we're looking to be in an ecosystem of people that believe that. We believe partnership and people first, and what that means is simply we want to make sure that everyone wins a little bit more than we win because life is short. And if you don't like us, please don't sell your business to us, right?
Yes.
Because we're in it for the long term with you. We believe diversity and inclusion requires intentionality. If you're not comfortable or don't believe in that, then don't partner with us because we're going to put DEI and supplier diversity and community development into our, sort of business plan on an intentional way. And then finally, we got to be entrepreneurs. We're buying, businesses with 3 to 12 million of EBITDA, 10 to 100 million of revenue. They're relatively small businesses where that founder or that management team knows every employee, every supplier, every customer. Our job is to make sure nobody leaves. When people leave, we lose money, right? And so step one is to get them comfortable that we are here to be your partner, that we want to keep things the way they are, but sort of add a little bit additional resource, a little bit more capital, a little bit more people to help you accelerate growth in ways that most smaller businesses don't invest in. If we can get them to trust us with that fundamental bet in our values, then we win. And if
Yeah.
we don't, it's an uphill battle to try to fix it.
Yeah, it goes back to your comment about mindset, right? Because at the end of the day, if I have the mindset that we're going to be in a partnership so that we both get better, right? We're not here to fix anything necessarily, right? We're just here to enhance. We're here to help, both parties win faster and go further, and I love that.
Can I add something?
Yeah,
So
please.
I think it also depends on where you are in your evolution as a business. So as we've gotten bigger, it's gotten harder for us, quite frankly. When we first started buying companies, we would buy a company in a space that we probably weren't in, right? So if we were buying, I'll give you an example. We bought our first wireless asset that their whole world was building wireless networks. Well, we were kind of doing wireline, we weren't doing wireless. So it's a lot easier because you try to find the ways in which you can help the business, but the integration is somewhat simple because you're kind of coming into a bigger company, but there's not a lot of other people with your job within that company. So for years, our philosophy around M&A was, we're looking for that company that is underfunded, that, the customers love them, they have great opportunities to grow their business, but for whatever reason, they don't have the capital to support it. It might be that they're not willing to sign a personal guarantee on a loan. It may be that the spouse doesn't want the other spouse to sign up their personal guarantee or their house, right? To roll it all again. Maybe they rolled it once or twice. They're not ready to roll it again, but they see this huge opportunity. And in those cases, we would buy companies, we would give them a significant part of the back end of those deals. So if they actually achieved the growth, they would make a lot more money than by selling their company up front. That was really effective for us as we grew. But then we got a lot of scale. So now the acquisitions changed, right? It was about, we've got a customer, they've got a lot of work, we've got to significantly grow to meet the demands. And we could do some of that organically, but if the customer wants it done faster, then some of that we have to go out and do acquisitively. Those deals are different because you're bringing people into an organization that already exists, and now you're trying to find a way to make both organizations together. I agree with 100%. If we lose people in a deal, we failed. There's so many companies that buy deals based on synergies. And they come in and there's they do some math formula that says I can cut 30% of the costs out of the business, and that means I can get rid of 30% of the people. With every person that walks out that door, there's a history, there's relationships,
That's right,
and there's
knowledge.
dollars that are going
That's
with
it.
it.
That's
It's a
it.
terrible way to try to buy a company, to think that you're going to make it up on synergies. So the idea is, how do you get two entities together, and how are they better together than they were individually apart?
I think that's very powerful. Yeah.
We were doing fun facts. So I'm a big guy that believes in mentors, both indirect and direct. And in my list of 5 indirect mentors is Jose Mas. I just want to be very clear, what you have built and what you've done is exceptional. And you've come from a family business to where you are today. It is an absolute case study on how to go from small to big. And so I don't want the compliments. I want to take one small break. Please compliment Jose on everything he's done.
Yes.
It-
I love that.
And just the reason why I take a break is because he's now at a different stage of the food chain, right? Which is he's talking as a strategic buyer at scale, where everything he's buying is actually adding on, and there's a different integration curve. And I think for many of you may be coming more from a short chip stack and a small business play where your point was when you're smaller, you can move more nimbly and be able to pivot and basically not have to change anything and to love the owner and to keep them there and to give them the second bite in the apple. That is just a different game than what you're playing when you get to $13 billion. They both work. It's just you have 5 more levers to play when that owner has built this business and isn't ready to have it become named Mostech or named Comcast or feel like they had to report to some random vice president. In the case of you, you can say you can leave your name, you can stay the chair, you could do this and that. And you have these degrees of labeling someone to give away their business to someone they don't know, but in a safer way to transition or succession out of the business. And it's just 2 different games, but ultimately I aspire to be more like him. But at the moment, I get to play a smaller footprint that gives me more levers to work with founders.
I love
And as I
that.
listen to you, I actually want to be more like that.
See how this works?
As crazy as it
I
sounds,
love
right?
it.
So I think we
I
are a
love
little
it.
bit different, right? In that we still view ourselves as a family-owned business. So even though we're, the size that we're at, we still take immense pride in how we came up, what it took to get here, and it's part of our DNA and our culture. And every employee that works at Mostech, wherever they're from, 35,000 of them, they know our story. And they know how hard it was for us to be where we are today and what it took for, my parents and their generation to give me the opportunity to be sitting here today, and all the hard work and all the effort and all the bruises that it took. That's an important part of our culture and our DNA at our company. It's what drives us. It's what makes us successful. So whoever comes onto our team, or whatever the size of the acquisition, that philosophy, that culture, even at a big scale, that it's still critically important, because if they don't buy in, if they can't buy in that that's the way that we're going to manage, that's not going to work for us. No matter what size it is, no matter how much we think we might be able to gobble somebody up, doesn't work, because people leave. So that culture becomes that much more important to make sure that they truly understand what it is that you're trying to accomplish and that they buy in.